This podcast is brought to you by Blue Guardian, the only prop firm that protects their traders.
This is going to sound weird. I don't do it for the money. I do it for freedom. If I want a day off, I can have a day off. I don't answer to anyone. I didn't need to use other people's money to trade. So first and foremost, I had enough money to trade money of my own. A lot of people ask me, should I move it to break even? You can, but my argument is I'm not trading the chart. I'm trading my P&L at that stage. This is going to sound a bit contradictory. So it was good being on a trading floor. And at that stage, I'd already had a strategy that was consistently profitable and I was happy with. Otherwise, I wouldn't be on a trading floor because the overheads are like $2,000 a month. You had to make $2,000 to break even. The problem with that is that you get so many other traders. This one trader would come in and he would just place his trades. You know, he'd be in literally about half an hour. He'd place his trades and then...
Episode 235. All right, folks, we've got Tom from Simply Forex coming up on the show. Now, Tom's got a 15-year trading veteran. Look, he did so well that he was able to buy a spot on a trading floor for $2,000 a month, and he knew that he had to make that back to actually start making money on his account. So he was $2,000 in the hole. You're going to find out his whole trading journey, his trading story coming up in a second, as well as the conclusion to the Ben Omar episode where he talked about a hedging strategy. In fact, we've gone a step better. We've got Tom here sharing his own hedging strategy. This is what makes him money day in, day out in the markets. That is dropping on the channel very soon. So please make sure you subscribe so you don't miss it. Other things happening here on the channel, we've got the live streams. We've got 5 live streamers hitting the Trading Nut channel this week, and 4 of those guys plus myself are doing the Blue Guardian challenge. I'm running one of my trading bots on it. You get to see all the progress and weekly updates that drop on Trading Nuts YouTube. And last but not least, if you sign up to my Robot Builders Club this July, you're going to get yourself a $25,000 evaluation from my sponsors, Blue Guardian. So let's hear from them now and get on with the show. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation. All right, folks, here we are on Trading Nut. We've got Tom from Simply Forex in the house. Now, Tom's been around the trading world and a trader for many years. You may have seen him on other shows because I know he does feature now and again. You're all the way over there in Dubai, but you're a Brit. So welcome to the show, Tom.
Thanks, Cam. Thanks for having me. Been in Dubai almost 9 years now, but originally from the UK, and it is ridiculously hot at the moment in Dubai. But all good.
And what we found out before the show was that Tom grew up in the same town as my wife in the UK, which is like quite a small town, or I suppose it's grown now, but kind of small world, really, isn't it?
Yeah.
Crazy. Very small world. Very small world. Righty-ho. So we're going to dive into your trading story and find out how you got to where you are now and all the hurdles along the way. So how did it all start?
My first sort of, start in trading was with a stock, basically. I started, I had money aside. I was thinking, what could I do with this money? Started venturing into stocks and shares, basically. I remember the first stock I bought was a Visa stock back in 2008. And then my main focus then was stocks, and I was just sort of trading those more, long-term trades that I would just buy stocks and hold them and leave them. And then my sort of interest grew from there, really. And what started with stocks, I also looked at Forex, and then slowly moved into Forex. It was a lot more liquid if I wanted to trade in and become a day trader. And that was the dream, really, to become a day trader. Took many years to get profitable and consistent. But yeah, it was initially stocks and then slowly moved into Forex. And here I am, 15 years later.
And I know you've been on trading floors and all sorts of things along the way. So let's dive into a bit of detail around this. And so the transition from stocks to Forex, were you working at the time when you were trading the stocks, and what made you shift to Forex?
Yeah, and that's probably why it took me so long to become consistently profitable, because I had a full-time job, as most traders do to start with. I was, stocks were okay because I could just buy a stock, sit on it and leave it, and then collect the dividend. Whereas Forex started requiring more and more of my time. So I started, less swing trading, because it depends on how much screen time I can give it. So I started with swing trading, but then it just took up more and more of my focus. Probably wasn't great at work as a result. Just don't tell any of my ex-bosses. And eventually could spend more and more screen time with Forex, and slowly become from swing trader, to an intraday trader now.
And what career were you in back then?
So sales, mainly different sales jobs. I've been in recruitment, I was in events, many different jobs,
Okay.
but none I just did it for the money. The money was good, but
Yeah.
it wasn't what I wanted to do.
Yeah. And I think it's quite useful just for people to understand what somebody's done in the past, so they may be in that same situation looking to get into trading as well.
Yeah,
So
sure.
so you found that the time thing was a big factor in terms of moving from stocks to Forex, and what kind of education were you seeking at the time, going through? What was helping you get an understanding of what was going on?
Yeah, so just a lot of online stuff, really. I can't really remember a particular website. I just looked at everything I could and just get as much information as possible. There's a million and one strategies out there. And you should have seen my charts at the start. You've never seen so many indicators. You could barely see the candles, and then it went from that to the way I trade now is super simple. There's like a moving average 20, and that is it. But, I think everyone needs to go through that. It's difficult, you get all this information and you want to try it all. So you try a MACD crossover, you try RSI when it's overbought, or, you try all these different things, and that takes time. It takes years to weed out what doesn't work for you, what does. But I feel everyone needs to go through that journey and sort of, trial and error themselves. So that was me, really. Yeah, I just sort of tried everything.
And how did you weed it out? What was your sort of process for getting to that 20 moving average?
The fact that indicators are lagging, the real true, everything I really need to know is in the price action, is in market structure, is in support and resistance zones, and is in the candlesticks. This is real-time data that doesn't lie. It's there in front of you. It's the truth, if you like, and there's no getting away from that. Volume, maybe. I don't really trade with volume. But yeah, it all become noise. All them I had so many things on my chart, and it was just noise. And the simpler I made it, the better my results, became.
And so when you were like getting to that price action kind of approach, what were some of the things you were noticing, and what was that sort of transition from? And it sounds like it took you a while from being inconsistent, unprofitable, maybe break even, and then how did you get to the profitability point of view? What was not point of view, stage, should I say?
Yeah, well, it was stripping everything away. All of these, like I say, I had Higanashi candles, I had MACD on my screen, RSI, average true range, moving averages, about 4 moving averages. Once I slowly stripped all that back, it was the realization of, I don't need all these things. I can, you need to spend a lot of screen time understanding market structure and trends and how they move. But once you understand that, that is your biggest weapon, not all these indicators. I understand if people want to use an indicator as an added piece of confluence, but I wouldn't necessarily trade just on an indicator. It would be price action with an indicator to back it up, if you know what I mean.
And so, I mean, you obviously came to the point where you had a strategy, or you're building a strategy that was going to be the core of what you were doing. How did you manage to create that?
How do I manage to create that? You know, time, screen time, and just understanding that, you know, you have to understand the market. If it's trending, people want to follow the trend. And if you break trading down into its bare essentials, you just need to decide who is in control, buyers or sellers. That's your only question, really. And trend can tell you that. It won't give you your exact entries, but if it's in an uptrend, I'm going to buy it. If it's in a downtrend, I'm going to sell it. If it's ranging, I'll probably stay out or sell the top of the range, buy the bottom of the range. And that is trading in a nutshell, if you break it down to the bare essentials. And then once I understood the simplicity of it, I then started, working on entries and risk to reward and, money management and these just as important things, as well as understanding the charts.
And what timeframes were you trying to establish the trend in the beginning, or the range, or whatever it was?
Yeah, I've pretty much always stuck with that. But really, the day chart is king for me. Whatever the day chart is telling me, I do. Yeah, it's like my boss. Yeah, so if the day chart's in a downtrend, I'm looking for shorts. I enter on lower time frames, but if the day chart's in a downtrend, I'm looking for shorts. If it's in an uptrend, I'm looking for buys. And then I just look for my entries on the lower time frames.
Okay, and what time frames are the lower ones that you're mainly focused on?
So H1 for entries, well, H4, H1, even M15. It depends what I'm looking for a certain setup to trade, and then that might appear on the H4, but doesn't necessarily make sense on the H1, but I will still take that trade. Or I'll have a setup on the H1, but it may not make sense on the H4, so I won't take that trade. So I combine the lower time frames, and if they sort of make sense with each other and there's some confluence amongst the time frames, I'll take it. And M15 I use as just an added piece of confluence. If I see that M15 structure break down as well, it's just another piece of confluence for me.
Do you ever, like, if you're sort of watching trading YouTube videos or whatever, do you ever see other people doing the same kind of thing that you're doing?
Yeah, I would say a lot of concepts out there, whatever you're looking at, they're built around market structure or trend. They're built around understanding support and resistance levels, and they're built around understanding candlesticks. If you get those things right, that is, the foundation of a solid strategy.
And if you're going to sort of teach somebody, here's a couple of things you need to know around understanding candlesticks, what would be your top two?
So there's a little on TraderView. There's a great little exercise you can do on TradingView. So you can rerun. You can go into history and rerun the candles. So I would just play the candles historically, and ask yourself, would I buy this candle? Would I sell this candle? Or would I stay out of the market? Because again, I try to just bring everything back to real simplistic view. They're your three options: buy, sell, stay the hell out. So go through each candle and just play one candle along. What would you do with that? Would I buy, sell, stay out? See what happens. Play the next candle.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
We actually did I did used to do that as part of a live stream challenge for traders that had been on the show to come on and literally go, right, you got to get 10 candles. We're going to pick a random place on TradingView bar replay tool, and you got to pick the next 10. And there was one guy who's been on the show a couple of times, Cass Darman. I think he got 9. And that's right. If you got 10 out of 10, did you win I think you won you could win $1,000. He got 9 out of 10 right in terms of guessing the color of the next candle. You didn't have to guess where it was going, but it was just, was it a bull or a bear? It was incredible. And then he was like outstripped everyone. I think the next best was like 3 or 4 or something like that. And then it really dropped down to 2s and 1s. People just could not do it.
No.
Well, how do you think?
That's a really cool game.
How do you think you would go in that challenge, given that and adding in the fact that you can say, I don't know, I'll pass on that one. What do you think?
Just 10 out of 10, Cam. No, I'm only joking.
Okay, yeah, of course.
Yeah, 7 out of 10, 6 out of 10. It's not an easy skill to understand, but candlesticks again don't lie. I'm looking at the close and open of the candle. Wicks, look for wicks. They're a big indicator for me. If you're seeing price rejection, wicks are huge. But yeah, I reckon I'd do all right at that challenge. You're not going to put me on the spot, Cam.
No, not right now. It might be a good idea for another video as part of this. But okay, so with your trading, when your trading started to turn around, what was sort of like the key aha moments for you, and like where everything started to click, and you're like, man, this is actually, I think I've got it. How did that all play out?
Yeah, it's a difficult one to describe that. Things just click into place, and it's not a specific one thing that you can pick out that changed my trading, but just stripping it all back, getting back to this simplistic view. I don't mean to keep repeating myself, but trading, you can buy, sell, or stay out of the market. And if it's not clear, don't trade. So I would say one big thing was really waiting for top-notch A1 setups. Perhaps before I would jump into things that, were, potentially not great setups, and overtrade a lot was a problem. But once I, just focused on those really good setups, it wouldn't matter if I had one trade a week. I have more than that, but as long as it's a good one, you make money. That understanding of you don't need to be in as many trades as, almost less is more with trading. I don't need to be in 500 trades a week. I can be in 2 good ones, so
yeah, it's interesting. Yeah, because a lot of people struggle with that for a long time, including myself. And it sounds like you were able to overcome that, or get to the point where that wasn't an issue. So how did you, and this was, we're talking ages ago, so this was the days before the prop firms were around, like Blue Guardian, these guys, link in the description, folks. So how did you get to the point where, I'm ready to leave my job, I've got enough capital to trade, and I'll be happy with whatever income I make from the trading? How did that play out? Did you sort of leverage it somehow, or do anything like that?
No, because I've always had jobs and I had savings, and I didn't need to, use other people's money to trade. So first and foremost, I had enough money to trade money of my own. And secondly, whilst doing my job, I got to a consistent level. It wasn't like, I'm understanding how to trade, quit my job, let's focus on trading. I'd been focused on trading for years, got to a consistent level where I thought, okay, let's commit to this. Let's go for this full time, and and I'm still doing it now. So there was a few moments in amongst all that. Obviously, you're gonna, there are gonna be doubts. It's a scary transition, but I'm so glad I did it. As you know, Cam, trading is one of those things that there's no. I don't. This is going to sound weird. I don't do it for the money. I do it for freedom. Yeah. If I want a day off, I can have a day off. I don't answer to anyone. And I'm so glad I made that transition.
And so you talked about, some, not so great times when you did make that transition. I mean, how did you can you walk us through one of those moments? Like, was it a bad trade or was it a series of losses or something like that?
Yeah, I remember it was a series of losses because as soon as you give up your job, you have no income. Your total income is from your trading. So that immediately from a psychological point of view puts pressure on you. You got to, you have family, whatever, you've got to provide. And it was that psychological pressure I put myself under that was difficult to handle to start with. And then that did sometimes result in bad trading. And I remember I had I think 4 or 5 losses on the bounce, lost a substantial amount, well within my money management, but I'm thinking I'm not getting an income. I've just lost X, I'm thinking, oh no, and there were times like that, but like I always say to my viewers, is just trade your strategy. You're going to have times where you have 3 or 4 bad trades. Just keep trading your strategy, and it come back round, and those losses become back into profit. So but a couple of hairy times.
And in terms of like your strategy and what what you typically expect in a risk reward ratio and a win rate, what do they look like on an average?
So how I trade, I look for a minimum of a risk to reward of 1:1, because how I trade, once I get 1:1, depending on what the candles are doing, I will close 80% of my trade. So I'm a big believer in securing profit early, because there's always news around the corner, or price can just take off in a different direction. So generally speaking, I look for a minimum of 1:1, close 80%, let 20% run, and I can let 20% run for 3 years because I know I'm exaggerating, but I know I've made profit in that trade, and I'll just trail my stop.
And when you move 1:1, are you moving the stop to break even? Is that how it works?
No, I'll trail the stop.
Okay.
Yeah. So my 20% remaining, I'll just trail the stop. A lot of people ask me, should I move it to break even? You can, but my argument is I'm not trading the chart. I'm trading my P&L at that stage. I'll just trail the stop below the H1 swing lows or swing highs.
Right.
So that's typically the minimum I'm looking for, 1:1.
And have you ever worked out, like, on average, what's your kind of like average risk to reward if you had held the whole position? And I suppose per trade, average risk to reward per trade with the 20% and 80% sort of factoring in there. Because I suppose if you've got 20% running and it goes 5 times your risk, that's kind of the same as like 1R, another 1R, is it? I don't know. I don't know. I'm just wondering. Yeah. So is the overall average like 1.25R or 1.5R or something like that? Well, like when you let them run, do they run, 20R kind of thing?
Yes, it depends entirely. So I'm either going to exit once I hit because I enter on the lower time frames. I'll exit once it hits a daily support or resistance level, or I'll just keep trailing on the H1, and I'm only wrong when that H1 structure changes. So it's difficult for me to put a figure on how much my 20% remaining runs. Sometimes it comes back down and takes me out. There's no extra profit. Sometimes it, like I say, it goes up 5-1, 6-1. So it's really difficult for me to measure that. but it works for me. You know, I in my trading journey, I know that I struggled to let winners run. You know, I'm sure it's a problem with a lot of your viewers, a lot of my viewers. So the way of combating that is taking some profit. You know, and it doesn't have to be 80-20, it could be 70-30, 60-40, 50-50, but it really helped me psychologically to let the 20% run.
And what's your like losing rate on that? How often do you take a full loss?
Well, I have a win rate of around, you know, 65 to 70%. Yeah, would be my win rate. So my losing rate is 35 to 30%. But yeah, I mean, yeah, they're the stats really.
Yeah. And what about like the markets? Are you looking at all the Forex markets, or are you mixing them with indices, and have you got a short list?
Yeah, so I look at 28 currency pairs, and I also keep an eye on oil, gold. I trade oil and gold. I don't really trade the indices, although I keep an eye on the indices because they can obviously impact Forex pairs. And how I don't, you know, people say you trade 28 pairs. Are you mental? But what I do is I apply a filter at the start of the day. So I'll do a daily filter. So I'll look at the day chart, potentially the weekly chart, and then I'm going to filter it down. Some days I'll only have one currency pair to look at. Sometimes I'll have 5 currency pairs, but I filter the higher time frames and then narrow it down to 2, 3, 4 potential trades for that day.
Right. Okay. And yeah, so what would be a typical day around number of trades you actually take?
Anywhere, I'd say 2 trades a day. Yeah, 2 trades a day would be an average. Can be anywhere between none and 4 or 5, but average 2 trades a day.
And look, I know I mentioned at the start you had you did when you were in Dubai join a trading floor. I mean,
that's right, yeah.
Did you do anything else like that in other parts of your career?
I didn't. No, that's the only trading floor I've been on, but I just wanted to be in that environment, you know, and learn off others as well. And it was a really good experience. But this is going to sound a bit contradictory. So it was good being on a trading floor, and you know, but at that stage, I'd already had a strategy that was, consistently profitable and I was happy with. Otherwise, I wouldn't be on a trading floor because the overheads are like $2,000 a month. You had to make $2,000 to break even.
Yeah.
So the problem with that is that you get so many other traders giving you advice and wanting you to speak to you and saying, oh, have you seen this setup? What about the news coming out? Oh, such and such said oil will be increasing, you know, production, you know, and all of that was noise for me. It was counterproductive.
Yeah.
You know, I don't want any of that. I don't want any noise. So yeah, in a strange way, it was a bit counterproductive. Glad I did it, but
And how many people were on the floor?
It was about 14. Yeah, 14. About 14 traders.
And I mean, do you ever keep in contact with these guys? Are they still trading or?
A couple of them I do. Yeah, one's not still trading. I don't think it was really for him. It's not for everyone. Yeah, I think it wasn't for him eventually. And another guy, I keep in contact with him and he's still trading. He's more of a swing trader. He's back in the UK now. He was out here. And he earns nice money trading. Yeah,
it's funny. It's like, what do you think sort of, I mean, you're obviously one of the people that did it, but I mean, what drove you to, and what do you think drove others to join a trading floor where, and in fact, you know, you're paying $2,000 a month to go and, sit with other traders, which seems kind of ludicrous to a certain degree when you could probably, I don't know, hire out your own office and do the same thing and find some traders. I mean, what was the lure there, and what was the benefit you think others found?
Well, part and parcel was to be with other traders and in that environment, because as you know, trading can be quite a lonely pursuit. I hadn't been in Dubai long, and I don't know, just meet other traders, meet like-minded people. And then once I took a look at the trading floor, you also get a risk department, which helps you manage your risk, which is, again, you should be at a point where you can manage your own risk. But, there's traders on that floor that needed it. I see people scurry out of the risk office and sort of try to almost grab a trader and speak to them like, you are highly over leveraged, you're risking too much. So there was a risk department, which, added value for some.
Yeah.
And then there was a Bloomberg terminal. But again, it was not a value to me. I'm not a big one on news or, this fundamental data. I'm purely a technical trader. So eventually I didn't stay on the trading floor because it didn't make financial sense, and it wasn't enough value for me, but there were a couple of perks for some traders.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. And it's interesting. And so people do you go in there 5 days a week, or would you?
Yeah, 5 days a week.
And everyone was in there the full 5 days. So
yes, some traders, which I really didn't get. This one trader would come in and he would just place his trades. He'd be in literally about half an hour. He'd place his trades and then leave the trading floor. I was like, you don't really need to be on the trading floor. And he would come back the next morning. I'd be like, how'd you do? He's like, 1-1, lost one, or whatever, And I was like, why do you spend money and be on a trading floor? He was like, it was just like, don't know really. It was like, you make a very good point. But and
obviously so commute there to place the trades, and then it's like, it does seem very odd.
Yes.
It's crazy. And so were there multiple of these trading floors around Dubai, and you just selected one?
Yeah, exactly. I just chose one. There was an English guy running it at the time. Had a good chat with him. He was quite open and honest with me, and I got on well with him, so I chose that trading floor. And I don't regret it. It was a good experience. I enjoyed it, and
interesting.
But the cost of being there, there wasn't enough value. In fact, like I say, there was too much noise. It was almost distracting in terms of, my own trading.
And so what does your typical day look like now, your trading day?
So get up at midday. No, I'm only joking. So get up in the morning. Obviously, as you know, I've got a YouTube channel myself. So as part of my morning analysis, I basically go through all 28 currency pairs. This is my most important, hour of the day. And then apply my daily filter and just filter it down to a few trades I'm looking at. Then I pinpoint where I can enter on the lower time frames, set my alarms up, and then generally wait for price to hit my alarms, and and then I spring into action, and trade really. My first hour of the day is just like noise. I know I keep mentioning noise, but I just don't want no noise. I don't look at my phone. I have breakfast, I get to my chart, There's a daily affirmation I listen to. It's basically saying, Tom, you're a good trader. Remember your money management, your risk to reward, and don't take bad setups, blah, blah, blah. So I try to listen to that most mornings. And then just zoom in on the charts for an hour and filter them down, find my entries, set my alarms up, and then come back when I hear an alarm, basically.
And did you create that affirmation yourself?
I did. Funnily enough, with someone from the trading floor. He was like, look, Tom, I use a daily affirmation. Why don't you sort of, just to get me in the right mindset for the day? And it's on my channel. You can listen to it. I listen to that. I say most mornings I listen to that.
Oh, that's interesting. It's a nice little hack, I think.
Yeah.
I mean, so going back to like when you got started in that, and if somebody else was going to be taking the same path that you took, I mean, what do you think made you different from like other traders out there that are giving this a go?
There's no substitute for putting in the time. Yeah, I knew this is something I wanted to do, and every minute I could, I was putting into chart time, even while I had a job. Lunch hours, breaks, during my job most of the time as well. If you want to get good at something, you've got to put the time in. So that first and foremost. And then I guess my other skill is just breaking it down, trading to its simplest form. Yeah, that's what really helped me. It's just, you can have all this noise, all these things that potentially help you trade. But for me, it's just a distraction. The truth is in those charts in terms of price action, support, resistance, structured trend, candlesticks, also value areas. This is a big thing I look at, these value areas. But that really, put the time in, keep it simple. These are the things that really, took my trading to the next level.
And so if somebody was like working a day job, what would you recommend they do from a step-by-step process to get to that point of like, I'm trading for a living, I'm doing exactly what you're doing, getting up in the morning, set my levels, and, jump on when things happen?
Yeah. Because when you've got a job, it's about screen time. I can look at the charts all day if I wanted to now, but when you've got a job, I would argue potentially you can't be an intraday trader. Potentially you need to be a swing. You definitely can't scalp. You can't be at work, on the 5-minute chart trying to scalp. Your boss would be like, it just wouldn't work. And even intraday trading, I would say, would be difficult with a job, So you can still apply the three things I keep talking about: market structure, trend, price action, candlestick, support and resistance, but just do it on a higher time frame where you get, 1 or 2 setups a week. You'll become a swing trader, and you can, then you have less screen time, and you can still build up a good understanding of trading just on a higher time frame, is what I would suggest.
And you mentioned chart time quite a few times. What would be your sort of like ballpark guess at how many hours you sat at the charts before you became consistently profitable?
Like to think about it, really. Lots. Especially when I made that transition from working to trading full time. I just, again, the psychology of it. I was at the charts far too long. Yeah, I was looking at them, like 9 to 5 almost, when the London opened up until when the New York opened. I put that pressure on me because I wasn't earning an income from another source. And that became detrimental. But I was doing, let's say 9 hours a day screen time, crazy amounts. But obviously I've learned from that. I just set my alarms now, walk away, come back. If I get a setup, great. If I don't, no problem. But yeah, some
And,
serious screen
what
time.
what were you doing in the 9 hours, given the fact you weren't, I'm guessing you were sort of trying, staying in line with a number of trades you're placing now. I mean, were you looking at every tick, or were you back testing
Yeah,
things or trying new things
yeah,
out?
yeah, sort of back testing things, not looking at every tick, because I would have more grey hair than I currently have. But yeah, just sort of back testing, sort of just trying to reinforce my strategy. And to be honest with you, it was more the fact that, it's been ingrained in you as a person that you need to work 9 to 5.
Right.
It
Yeah.
was more that.
Yeah.
It's been so ingrained in me all my life. So when it came to trading, I sort of went from a 9 to 5 job to a 9 to 5 trading job. And as it's not how this game works. It's about, you don't want that amount of screen time, and almost less is more. So it was more that, breaking that 9 to 5, structure that just ingrained in me. And once I broke that, it became less stressful. And I had more, the reason I did it was for freedom, and I had more freedom to do things I wanted.
And now the other thing I was going to ask around, like, so you're setting your alerts, they go off, you jump into action. I mean, how do you manage the rest of your day around the alerts that could go off at any time, so you're not sort of caught short? And what happens if you are caught short?
Yeah, so obviously the alarms I can set up through my phone as well. So if I am out or up the gym or doing something, then I'll still see the alarm on my phone. I don't like necessarily trading on my phone. I like to see a chart on the big screen. But I've done my analysis in the morning, and it's very thorough. So when I do get an alarm on my phone, I can check it on my phone. If the structure's breaking down as I wanted, then I will enter a trade. I'll enter a trade in a coffee shop or up the gym or, wherever I might be. Not the pub. Don't enter trades in the pub.
Yeah. and how do you do your risk management, like when you're entering on the fly, if you've got a dynamic stop loss, or have you just got a fixed size that you put on?
So generally speaking, I'm entering on the H1 chart, and whatever the H1 swing, in a downtrend, whatever the H1 swing high is, will be my stop loss. It could be 10 pips, it could be 50 pips. Yeah. And then I'll adjust my money management accordingly. Or in an uptrend, I'll just put my stop below the swing low on the H1. Is typically where my stop loss placement is. And I don't actually use a stop loss. I use a hedge. So
yes, that's right. Yeah.
Yeah. Instead of getting a stop loss, it will become a buy order. So if I'm in a short, I'm selling, my idea was wrong, I will become in a buy order, and I will hold a loss and wait for the next setup.
Okay. And I think we're going to jump into a video after this and have a look at your hedging approach, because I know another guest had that on and we didn't get a video of it. So it should be able to tie the strings together for that. Now, I'm still sort of like trying to work out, are you taking a percentage of your account to put at risk, or a monetary figure, or just a lot size? How does that work?
A percentage. So okay. Yeah, percentage. So
and
how
do you work that out on when you're on the out and about on your phone? Have you got an easy way to work that out? Can you easily do it in your head, or how do you do that?
I can easily do it in my head. I can look at the pip amounts, and work out the size of my trade. Yeah, I've been doing it for years, so I can do that in my head. But there's lots of good pip calculators out there. But I just do that in my head quickly. Work out what that will be. Yeah, exactly that.
And what kind of percentage are you looking to risk it per trade?
Yeah, so because I hedge, typically I will risk 1%. Okay, so if the trade goes against me and picks up my hedge, that is typically a 1% risk. Okay, but then as I hedge, I will let a hedge run to 3%. So I risk anywhere between 1% to 3%. And the way I trade as well, I might not be in my trade full size. I build a trade. Yeah. So every time I enter a trade, it's not 1%. It might be 0.5%. Yeah. And then I know I've got another 0.5 to play with. So it's that side of my trading. The strategy and how I enter is quite rigid, but how I manage a trade is more fluid.
Right. Yeah.
Okay. And I'm willing to, not go in 100% of my normal trade size, might be 50%, 50% or 20, and build a trade.
Yeah. And so like if for example your hedge fails and you lose on both the long and the short, I mean what happens in that scenario where it's like a complete, well, not catastrophe, but it's just, not ideal?
No, and you're right. It's not a magic wand for, making every trade profitable. It's not. But what the overriding factor with hedging is the day trend. So if I'm with the day trend, it doesn't, because I enter on the H1 typically. So if H1 structure's broken down, the day trend is telling me to short. H1 structure's broken down, I can enter. My stop's above the last swing high. Then if it's wrong and it comes up, then I'm just looking for the same setup again, as long as the day trend is still in a short. The only time I could potentially build up to a 3% loss is if that day trend changes on me.
Right.
Then I could, not in trouble. I'm, well within my money management, but that's when, a trade can, that's like worst case scenario with a hedge.
And so like at the end of, say, for example, a month, have you sort of got a figure that you're after, or even a week where you're sort of like going, if I make that much, I'm kind of happy? Or are you sort of like, this thing's exponentially growing every single month, so I kind of, over the course of, weeks or whatever, I'm gradually getting more and more in terms of the return that I make, because I'm risking 1%, obviously withdrawals taken into consideration, all that sort of thing. How do you do how do you do that, or do you even not even bother factoring it in?
I'm aware of what I earn each month. I don't, for example, some people say, look, I want a target of 1% a day, but the market doesn't care. Yeah. You're like, Mr. Market, can I have 1% a day? He'll be like, no, get what you're given.
Yeah.
So I don't put too much emphasis on that. I trade the charts, not my P&L. So whatever the chart gives me and allows me to have, I take according to my strategy. Some weeks that might be, a 1% loss. Some weeks that might be a 5% gain. I don't really have targets like that, because I think they're, without being too hard, pointless. The market has doesn't care what you want.
Yeah.
So just trade my setups and focus on managing that. I can control that. I can't control what the market will give me that week.
And have you ever considered trading other people's money?
So I have been offered, to trade other people's money, but I don't need to be quite honest. I don't need to. I've got my own money. I trade that. I make a nice living, and like I say, not for the reason of nice things, but for the freedom it gives me. So no is the answer to that. I got offered it a couple of times, and I just said, no, I don't. I don't want that added pressure.
Right.
Like the trading floor, anything that throws me off my game or adds pressure I don't want or even need, I'm just like, no.
So, fair enough. Brilliant. Well, look, we're going to jump into the quickfire round here and then wrap this baby up. So how long did it take you to go from newbie to consistently profitable?
not to scare you, but probably about 8 years. The first 4 years were just trying different instruments, stocks, Forex. Yeah, you said quick fire round. I apologize. I'm giving you
it gives us context.
Yeah, but then the following 4 years when I decided to focus on Forex. So 8 years in terms of the complete journey, 4 years in just trading Forex.
What's your favorite entry setup?
What was once support becomes resistance, or what was once resistance becomes support. Yeah, simple price action. I love this setup. If you trade only that setup, you'll make money.
What strategies do you use to exit or manage trades? I think we actually answered that question with your hedging.
Yeah, so if trades go against me, I hedge, typically for take profit, risk to reward of at least 1:1.
Yeah.
And I close 80%.
And do you have a recommended trading book or resource?
Everything I've learned's been online. Yeah, we've got a list of books on our channel, but everything I've ever learned's online. So no, I can't give you a recommendation for a book.
YouTube, maybe.
Yeah, YouTube. Yeah, exactly.
What about what's your preferred broker and trading platform? Look, folks, I know you want the answer to this question. Which broker is this trader using? Now, the answer has been sponsored by Black Bull Markets. So to find the answer out, you're going to need to go over to tradingnut.com, find the show notes page for this guest, and then all will be revealed. Now, if you could leave our listeners with one piece of advice, what would it be?
It would be discipline and patience. Discipline and patience. They're the two things that, take time to really ingrain in you. But once you get that discipline and patience down, nobody gets it fully down. I still have times where I'm, lack discipline and patience, but just focus on them two things and keep it simple.
Brilliant. Well, look, before we wrap up, what's the best way for traders to get hold of you?
So guys, I've got a YouTube channel, Simply Forex. I'm sure Cam will leave the link below. Come check it out. I give you my trade ideas analysis every morning, guys. So come check it out. We'd love to have you.
Brilliant. Well, look, a big thank you to Tom for sharing with us today. Everything we discussed, along with that link to his YouTube channel, will be in the show notes. To find them, simply search for Tom in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, so there you have it. Interview done and dusted with Tom. Now, remember, we did shoot that video afterwards. It goes for about 15 minutes, and he breaks down his entire hedging strategy and his trading strategy, really, as a whole. So make sure you are jumping on the YouTube channel for that, hitting subscribe so you don't miss it. Other things going on here, we've got those live streamers, some of them taking on the Blue Guardian 125K challenges. And also there's that weekly recap. So if you missed the live streams, you can jump into that or jump onto my Robot Builders Club and you're going to get yourself a 25K evaluation from Blue Guardian on the house. All right, folks, thanks for watching and we'll see you in the next one.